Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, March 28th, 2019. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. What you'll see here again, the market remains in a very bullish trending structure, very strong trending structure. Really hasn't broken that structure just yet. But one thing that remains a warning sign is how strongly the price rejected at these highs late last week. The Thursday rally up, the Friday harder push down, and then when we bounced here Tuesday, Wednesday, bears defended in this zone, the 28.35 to 28.40 zone, which is what we were talking about before, the midpoints of these expansion days down. That right there is indicative that bears are on board for a shot at pushing this thing down. However, again, just because bears are defending here does not mean that the bears went out. And again, bulls are defending here, looking to extend this thing another leg higher. So you're seeing the tug of war on both sides right now. This thing could continue to develop, and then we could see this thing either spring to the upside or to the downside. We are at the highest point here we've been at in a while, and so you can see this is where we really weren't able to get above before, the 28.20 zone. And now price pushed through the 28.20, got as high as 28.60s, little bit of a rejection, and now finding resistance below 28.20 again. So you can definitely see why bears are defending this area, because if there's a failure to get back above 28.20s, that can open up a return back toward 27.25 as at the very least, and then can open up even more downside, which can take us back toward the 26.15 zone. So this is an easy area for bears to look to defend. Again, got to continue to watch this zone, because if the bears don't get paid, the upside buy stops come out and this thing starts another wave higher like this. So continuing to watch this action here. 28.10, 28.20, that zone continues to be an area of resistance in the near term. We'll see how it plays out heading into the rest of the session. Looking at the NQ here, you'll also see very bullish trending structure, a nice pullback, very strong blow off top qualities to this reversal here. Outside day down on Friday, a great rejection here off the 74.50s on a retest in the NQ, which is what we were looking for that day and the day before. Again, if this is going to be a blow off top, then any pullback here into this zone is going to be defended, and so far we've backed off that area. So you can certainly tell the bearish warning signs that have kind of played out here, and it's still in a bullish uptrend. So these bulls can still win out and take this thing higher, but again, it's going to be based off of these bears not getting paid. So at the moment, key level here to watch 72.75. On the upside, 74.50 is the big level. Until then, we could literally see more chop in here before another big move occurs. But any big drop down in rejection, something like this or whatever that may happen through 72.75, that could be the last line before this thing really starts to rally. So again, some things to watch out for as we continue to head into the next day here. We have an inside day with 53% of ADR. So again, we could easily continue to see chop back and forth as we head into the end of the quarter tomorrow. Let's take a look here at crude oil. Crude oil right now pulling back from the 2-day highs here. One thing I mentioned before is the 58s here is the top of the previous price distribution here. Price pushed through it, retested it, and continued. I mentioned we could be building another range above 58s now. So any rejection here can bring price back down to this low, and then again any rejection bring it back up, and then all of a sudden we're trading up here again ahead of the next move. Overall, this market continues to trend higher as well. We could easily see a move as low as 57.50. You can see this is the previous high, or the current month's high. This is the current month's low, and right now those are the pivots for the upcoming month, which start on Monday. That's current midpoint right now. If we don't get a newer high or a newer low for the month over the next day or two, then this is our midpoint. So at the very least, we could be looking at a 57.46 retest to begin the month. And again, any rejection there, like we saw last time, that's the midpoint of the month. could lead to another continuation higher. A failure there opens up to a rotation back to this point here at 54.50. So that's kind of the blueprint or the roadmap that we will be using for crude moving forward. Okay, looking at gold, lastly, gold down 0.6%. We've been watching 1320. I mentioned that this one really has had lots of chop back and forth, and also it's been trending up, but it really hasn't wanted to find acceptance above 1320 just yet. So this one I've kind of backed off of for right now. It's really back and forth a lot. We saw a failed high yesterday lead to some selling pressure, and now a continuation here in today's market so far in the pre-market trading. This one could see much more weakness back toward the recent support low. We're playing here between 1280 and really 1350 right now, and if this isn't going to get above 1320, then again down here toward the 1280s may be in play. As long as price remains above 1280, we still have more upside potential toward 1360 overall. Alright, that is it for now. We'll see how it plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.